Hello, everyone, and happy Friday. Welcome to another edition of the Forex Technical Market Update for Friday, August 28th, 2015. Okay, what we see in the markets is that the euro is trying to stage a recovery after being beaten down after the apparent breakout on earlier this week. So the market has traded down, and we are currently finding support at this just about this 50% retracement level of the move from 108.55 up to the breakout point of 117.14. And as I said, with breakouts at times, what could happen is that the market could come down below the trend line, find support, and then head back up. Or we could really continue going back down to find support at this trend line before heading back up. Or we could break down below the trend line and the market returns to a bearish mode. So anything is really possible with these forex markets, and that's why you have to be constantly analyzing what's happening, because in situations like this, the market can whipsaw. You can have a number of whipsaws before the market ultimately heads in a particular direction. And when the market ultimately heads in that particular direction, that is where your profits are. But sometimes what you have is a number of whipsaws before the market actually moves. And it's important to have the capital to withstand the withdrawal. You find with a lot of traders is that when the markets are whipsawing them up and down, they may have a couple of losing trades, and those losing trades are too large for their portfolio. So if you are down 60, 70, 50%, then that means in a couple of weeks, that means that you're over trading and you're risking too much per trade. If during a drawdown you're down 5, 10%, 12%, even, it's not really that detrimental, because ultimately, if you are aiming for larger percentage gains like 30%, 40%, a 12% drawdown is all in the realm of what's to be expected in the markets. Okay, so that's the euro. Now the Japanese yen recovered in following the stock market. We are down slightly on the morning, but the Japanese yen has recovered, and we could see a period of choppy price action with the yen. And I'm going to wait and see where the market closes this week before I pronounce what could happen for next week, because this could be, let's say we end the week like this. This could be a hammer candlestick pattern. And if that occurs, we'll be looking for a close above the hammer, above 122.02, and that will be fairly bullish for this market. So I'm just going to reserve analysis until Monday to see exactly where this week closes, and then the next week on the weekly charts. Taking a look at the British pound, we are down this morning. The market is challenging. We have a trend line that the market is challenging here, and the market seems to be breaking below this trend line. As you can see there, the market is breaking below this trend line at 153.78. But traders should be aware that right below this trend line is the monthly S1 support at 153.88. So we could see the market flirt with this level, 153 level, and head back up to the upside. So we may find some initial support in this 153 level. If not, and the market breaks below this low here of 153.27, we could see a further move down in the British pound. So we're at some critical support points here, and we're just going to wait to see if the market can find support at this point or not. Taking a look at the Australian dollar, still the market tried to recover yesterday, but sellers still seem to be coming in to sell the Australian dollar, and we're still in a broader downtrend, with the Australian dollar. Australian dollar has been very bearish over the last couple of years, and and that's in line with what has happened essentially with the gold market. You see, Australian dollar topped out in 2011 and has just been heading down ever since. Topped out near the $1.10, and we're currently at 71.40. And taking a look at the gold market, we see that it topped out again in 2011, and the market is down pretty significantly. So the Australian dollar is looking pretty much like a mirror image of, well, not exactly a mirror image, but it seems to be taking its cue from the gold market. The correlation is uncanny over the longer period with Australian dollar. Taking a look at the Swiss franc, we see that the market, after the huge drop in the Swiss franc in 2015, who could forget that? This market has been, this is the consolidation. This market is just forming a pretty big triangular consolidation pattern in the Swiss franc. So the markets are very choppy. It's up, it's down, it's up, it's down, and I think more clarity will present itself once we break out of this consolidation pattern with the Swiss franc. British pound versus the euro. We see that the market is still in a broader downtrend, and it's corrective in nature. After making a new low into July, this market has corrected the low, and what we're looking for is to see if the market can close above the 75 level. If it does, we could have a larger correction up to 76 and maybe up to even 77. If not, and the market collapses down to 71, we could see a return to the low near the 69 level with this chart. Coming up to the end of the month with the Canadian dollar, daily chart of the Canadian dollar, and we are above this resistance area, and that could signal that we may have further losses in the Canadian dollar, although the market is due for some correction at some point in time. This rally started in May, and we're currently in August, and this market is due for a correction. And when the correction occurs, we could be looking to see if we could re-enter the market to the long side, because the market has indeed, or looks like it's going to close above this all-important resistance level near this 130 for the Canadian dollar. Okay, so that's essentially it on the Forex market update. And if you want to have the trading signals sent to your account automatically, you can click the link below this video, and what you will see is how a portfolio is managed in real time. You'll have up times, you'll have down times. It can be fairly instructional for members in the portfolio, because you're really seeing how a portfolio is traded in real time. You'll see the low points and you'll also see the high points. With the signals, all you're essentially doing is following the trades that we're making, and these trades are copied directly into your account. So you're essentially just copying us. So if you want some more information on how to do that, you can click on the link below. And it's Friday, the end of the week. I hope you all have a wonderful weekend, and I look forward to seeing you again next week. Thank you.